Hello everyone, welcome to the one more learning video of this post-market analysis series. Now this is the chart of Bank Nifty. Okay, yesterday what we had discussed, now yesterday's trading plan was very simple, that I had told that if at all market opens huge gap up, I am going to sell. If the market opens huge gap down on the support, we are going to buy. And if the market opens flat and breaks this support level, right, I had clearly told that I am going to short the market. Now can you see that this is the first candle of the day? Okay, and what was the first candle of the day itself say that there is some serious selling pressure. Okay, can you see this is a candle with huge upper price rejection, and from which level it is coming? It is coming from 41,500 level, right? Now this was a clear cut indication right in the morning itself that today's market is not going to accept the buying pressure. Okay, it is not going to sustain there. Market is going to fall. Sellers are strong today. But I told in day before yesterday's video, right? On this candle, whenever the breakout has come, but the breakout is huge, you should always make a habit of waiting for the retest and then take the entry, right? Now put that same learning in today's trade. Okay, look at this. This was the breakout level, but what is the candle size? If you enter here, you have to keep the stop loss. This is a huge stop loss. What do you do in this case? Wait for the retest. Did the market give a retest? Yes. And did it give the confirmation also? This is kind of a morning star pattern, right? Sorry, this is the evening star pattern. And what is the evening star pattern say? Evening star pattern is a sign of bearishness. Now this was our entry, right? This was our entry with this as the stop loss. This should have been your first target. Why the first target is, you see, this is a strong previous resistance. Previous resistances will always act as the new support. And you see, after opening the gap up, market has directly jumped from this region. It means buyers are sitting at this point, correct? So in the Telegram group, I had updated that we are going to short the market here, but the target given was here. This was the target given with this as the first target. Now when the market reversed from here, you look what was happening. I had shared an image. I'll show you that image first of all. Now how you can judge some price action movements even before they have occurred. Okay, see this. Now where was the market when I had shared the image? It had fallen down to the previous resistance, which was now acting as a support, and it had bounced. I was expecting this inverse cup and handle pattern, and this image was shared even before the market had actually formed that, right, at 11:23 only. Now you see, all these things will come with experience. Okay, now one thing was very clear. When I had entered the trade, I did not exit anything at this position. I had, because the reason why I had not exited, because the reason was the first candle. First candle will usually tell a lot of information about the how market is going to be. Do you see this? What kind of candle is this? A strong bullish candle without any wick on the lower side and the upper side. What is it indicating? That the market is heavily strong. Understood? Look at this day also. Market is a strong pin bar, right? That too at the support. What did the market do? Went up, came down, again bounced, right? So the first candle, first 5 minutes candle of the day will tell you a lot of stories. Okay, and especially if it is having wicks on the upside or the lower side, that is a confirmation of what might happen in the day. Now you see, what was market doing? Clear cut formation of a inverse cup and handle, and I had updated at this green candle only, right? Now imagine one thing and try to understand the psychology behind this inverse cup and handle. What is happening? That the market had gone up once, right? It came back. Now when the market has gone up from this point, it means, why is it going up? It is going up because this is a support, right? So it's obvious that when the market comes there for the first time, it is definitely going to react. And now why I had not exited the trade was, if at all market had to give the continuation pattern, it should have first broken the today's high. But today's high is already very strong rejection. It means market has got rejected from this level once. So it was very clear that even if the market goes upright, it is going to come down for sure. And what is going to happen? All the people who have exited the trade here, when the market was going upright, all the buyers, maybe when the market went up till here, maybe they were seeing a profit of 5,000 or 50,000, right? Or someone might be seeing a profit of 500. But when the market started to reverse, what will happen? this 50,000 will become 40,000, this 40,000 will become 25,000, it will become 20,000, and when the market eventually comes down to that point, they have lost all the money that they had made. And this is support. Let us talk in terms of support and resistance. This support has got tested once, twice, right? And the market is not able to make a new higher high. It is forming a lower high and falling. That is what has happened. And what would be the target? Till the gap filling. Also understand there is something called as virgin CPR. Okay, do you see this? This is an indicator called as CPR. A virgin CPR means there will be three lines on the chart. Okay, whenever these three lines are not touched right, on any day if the market has not at all touched that CPR, we call it as a virgin CPR, and this virgin CPR acts as a very strong support and resistance. Do you see this? Market exactly fell from that level, and what you could have done, you could have even initiated a trade at this point also, right? First, what I have told, previous resistance or the support will act as the new support or the resistance. Now this was the support, now this is acting as the resistance. Again you see this was the same cup and handle pattern again, but this time it was a normal cup and handle, this time it was an inverse cup and handle. So just based on cup and handle pattern, you could have taken two trades. This was the one of the easiest days to trade, but only if you had understood the logic behind the or the psychology behind the cup and handle pattern. Now let us see what are my plans for tomorrow. What are my plans of tomorrow? Tomorrow is an expiry day as well, so let us switch to a larger time frame. Okay, let us be in 5 minutes only. One thing what I am able to see is this trend line, right? If at all the market opens flat today, there is this global event, right? US Fed meeting is there. If at all there is no positive, if at all there is no negative news, then that is going to be a positive impact on our market, and in that case market might open flat or slight gap up. If market opens flat and then gives the breakout of this level, we are straight away going to buy for the target of 41,500 should be first target, right? Because market has fallen sharply from this point, it might again go up. See, if you will be buying at 41,300 level or something, and you will be straight away getting 200 points. 200 points is like easy 2,500 3,000 rupees per lot, right? Now you see, if even market halts here, gives the breakout of this level also, market is definitely go up to 41,700 level. Now this is the case for opening flat and going up. Now if the market opens flat and starts to fall down, right? If the market opens flat and starts to fall down, you see there is one trend line support that the market is getting. Which is the trend line? Wait, let me draw. Do you see there is this trend line support that the market is following, and this trend line is coming from 13th of September. Market is continuously following this trend line. So there are high chances that market might again halt up till that point. So I'll actually go on to wait, right? I will not go short immediately. I will wait. If the market opens small gap down, it halts there, and if then it gives a continuation pattern, a red candle, a green candle, and then a breakdown, only then I will trade. Okay, this is the plan for opening flat or small gap up, small gap down. If at all market opens huge gap up by any chance, if the market opens huge gap up by any chance, I will allow the market to go in the flow. I will allow the market to go in the flow. I will not participate in the rally. I will wait for the exhaustion, signs of exhaustion, and then maybe I will short. Right, this is the plan. If the market opens huge gap up, right, somewhere here and directly starts to move abruptly, in that case what I will do, we know that this is a strong resistance, right? This point I will short the market at this level. This is the plan for tomorrow. Let us see how the things go. All the best. And tomorrow, remember, this is a weekly expiry and the market is opening after an important Fed event, so market can be volatile, so please trade carefully. Thank you, and if you like the content, please let me know in the comment section, and if you have any doubts, please ask them in the comments box.